Thanks so much for doing this with us. And the thing that I would love to sort of just like start off with is when it comes to thinking about Gainsight and the metrics that matter most for you as a business, what are the things like you're most religiously tracking, like the things you care the most about?
Yeah. Well, it's an interesting time in the economy because, things are moving so fast, but, I'm finding the emphasis is changing, but the core metrics are still the same. So in the last, I would say almost 10 years, as, some of your audience might know, everyone's been really hyper focused on revenue growth and top line because that's how companies were simply, valued. So of course, revenue, ARR, particularly growth in both is super important. And then also along, with top line, GRR and NRR, are ones that we're just hyper focused on. So GRR, for those of the ones that the people that don't know, is basically measures how well you're doing with your current customer base and, the ones that are staying, the ones that are leaving. And then NRR, is one that we kind of look at as sort of like really the health of your business. So and I would say in the current economy, people are kind of shifting to a real hyper focus on NRR in particular. We just had there was a McKinsey report that just came out that said valuation is highly correlated to NRR, which is great for Gainsight's business as well because Gainsight helps with NRR. And then besides those, we are also, if you look at the valuations right now, investors are really looking at free cash flow. So that's one that we're really looking at. And what helps keep free cash flow is, having an efficient business. So we're looking at CAC payback period. And I'm hearing that a lot from investors, these days. So really hyper focused on that, which essentially shows the efficiency of, your marketing dollars. And we're also looking at Rule of 40, which we're understanding is very quickly focused, shifting to more of a Rule of 50 and even a Rule of 60. So, I think, so those are the ones we track religiously for our company. But I would also say it's really important also to just keep a pulse on the market and what investors are saying too, because they're moving very, very rapidly.
I really love the sort of like breakdown, especially as you think about like free cash flow matters, but then what are the components that drive free cash flow? That's so good.
Yep.
What do you have do you have a feeling on what ends up mattering more to build a more successful business? Is it that GRR component, the NRR component, or is this like
Yeah.
do you reject this premises of this question?
I do not reject it. Look, I think ultimately, I think it's NRR. And I think even, as we're looking at our business and we're even looking at our customers' business, we're seeing this shift. And the reason is essentially, as most of us know, it's a lot cheaper to keep and grow your customers than to get new customers. And so as we get into and investors are demanding a more sort of efficient a business, NRR becomes super key because the more and more you can sort of grow your customers and grow with them, then it's good for you. So I do think as we continue to sort of, as we look at the economy, but even before, I think there's this huge shift into NRR.
I have a related and extremely wonky question. So,
Wonky questions.
I'm curious how you think about this. We've like come across a couple of folks who we work with who are starting to think about not just payback period for new business, but then also thinking about what they're spending to generate upsells in their business, especially if that can be a pretty significant amount. And there's always this like little bit of a confusion being like, is customer success and like account management, is that just roll up entirely into your COGS? Does it go somewhere else? How do you think about the efficiency of your upsell business? Especially as a CFO of a company that focuses on customer success and retention, I'm curious what your perspective on this is.
We think about this a lot, and we get this question a lot. Should it be COGS or, should it be sort of an OpEx? And, I think that the COGS theory is sort of a throwback a bit to support. Because support is usually, in the COGS line. And, we think of customer success, of course, very differently. Customer success for us is basically, it's very strategic. And so we actually look at it as an OpEx, and we do actually put it in our CAC payback. And so, of course, that sort of changes that metric, but we actually do see it more aligned, like with our sales force, because they are, we have customer success is really focused on helping our customers get more strategic and more efficient, and that also ties into our renewals team as well as upsells. So we put it in OpEx, and we think that's where it should be.
That's super fascinating. So I really appreciate that. Because you are very much the expert on this. And then a related question then would be like, do you look at any other business health metrics that are specifically tied to expansion or upsell revenue, or is that sort of more part of the same core metrics that that you're already looking at, or is it like is there something special you do?
Well, I think that's probably just related to like how we look at customer success in general, and how we look at the team. So we do, we definitely look at, of course, GRR, and actually the team is actually their main North Star metric is GRR. And that is a conversation we're constantly having, like should their core North Star metric be on NRR? But underneath it is a lot more. So for example, our product calculates customer health scores. And underneath customer health scores are a variety of metrics. So things like product use, the breadth of product use, the number of upsells, the number of renewals, even things like invoice history. And so and many more. And so we rank all those, and you come up with sort of a customer, health score. And so that is, I would say, like another metric that we're kind of looking at constantly. What's the sort of average customer health score, as well as, how we look at, CSMs, like, what are their customer health scores specifically. So that's definitely one. We're also now sort of focused on what we call customer success qualified leads. So instead of just a sales qualified lead, we have CSQLs. And so we're looking at those and, how many CSQLs are sort of coming out of the team as well. And then to your point, we are also hyper-focused on just expansions and upsells. And we've got Renewal Center within Gainsight. So every CSM is looking at those, like religiously every day. We track that sort of as well. So that's how we're kind of looking at it. It's definitely goes much deeper to seeing what rolls up to both of those metrics.
If a CSQL is what I think it is, I really love the concept, but I rather than put words in your mouth, I'd love for you to expand on that a little bit more.
Yeah. So, you might be familiar with, sales qualified leads. And so those are, leads that come in through, marketing that sales has sort of accepted. And a CSQL is just that. They're leads that basically come from, customer success. And we want to give credit basically now to the customer success team. So that's what it is. And so, we track those now as well.
And how do you think about those from a finance perspective? Because I'm sure you think a lot about sort of your cost per lead that you're generating either from marketing or SDRs or whatever, but how do you think about the CSQLs and relative to those?
Well, for us, for us, I want to make sure actually now we might need to edit a bit, but make sure I answer your question. But for us in CS is part of CAC. All that cost is actually part of the CAC payback period. So all of the CSM costs will be part of that. So for us, it's another source, for that. We don't have to, however, in some ways is actually probably a cheaper source because we're not actually putting like marketing lead gen dollars.
Yeah.
So it is actually a more efficient source of leads. And so again, something that, that's why we think companies just focus on it more.
It's so great. I mean, I've never actually heard the term CSQL, but I know a lot of folks focus on referrals, and I feel like it's like aligned in so many ways. It's like cheaper, but it also indicates that you're serving your customers well. That's why it's referrals, right? I'm assuming.
Yes, exactly. Yeah. So it is something that we are talking a lot about more these days.
Yeah. Do you then in payback include sort of upsells and expansions as well? It's not just new business.
So we actually are looking mostly at new business. But I think you bring up a good point. I mean, I think it would be a good idea to actually look at it probably both ways. I think the industry standard is mostly to just look at new business. But as we're going to say that this becomes a much more important concept, and I think it will, just given where investors want to head. I think we would probably want to look at it both ways.
Yeah. As a leadership team, what are your sort of rituals around metrics like? Like, when are you looking at them? What are you focusing on? How are you digging into them?
Yeah. Cadence is so important, I mean, because on the one hand, you could spend a ton of time of looking just at numbers, but you just want to make sure, especially as a management team, that you're looking at things actually efficiently and you're looking at the right numbers. So I would say, first of all, we have a really great biz ops team that spends a lot of time and is constantly reviewing like the cadence, like, is this working? Are we being efficient with our time? And are we looking sort of the right things? And are they actually actionable? Are we making sort of decisions around it? And is it effective? Because ideally, you want to get ahead of things. So I think that's one thing. You just need people to sort of be thinking about it constantly. So what has worked really well, for us is, first of all, we have a dashboard, and the dashboard actually goes to the board fairly regularly, like every other week, but we also sort of use it as sort of just a flash of sort of where the business is going. And then we actually have a weekly business review that goes a lot deeper. And we do spend every week, first thing Monday, looking at metrics and just understanding sort of where the business is, and the leaders sort of go through it every week. And then we have a quarterly business review where we spend actually about like 2 to 3 days, depending upon the quarter, looking back, looking forward, seeing what worked, seeing what didn't work, and then creating actions around it. So that's sort of the cadence that seems to work with us the best, but we're reviewing it on a regular basis.
Can you dig into a little bit more in terms of, I'm thinking about like metrics in 3 broad categories, sort of like the go-to-market metrics, like leads and deals and opportunities and all of that stuff. The sort of customer health metrics, which is obviously like the bread and butter for Gainsight. And then the third category being sort of like more SaaS metrics, retention rates and upsells and churn and all that.
Yeah.
Or is it like all 3 of these and all of them? Is it different ones at different times? Or like, does the importance change depending on where in the year or quarter you are? I'm curious how you think about that category separately.
Yeah. We actually look at them all like on a very regular basis. I think the difference is, it just depends if we think an item is red, yellow, or green. So and then we might actually just dig way deeper. So for example, we're looking at GRR, NRR. We do usually look at average customer health on a weekly basis. However, let's suppose customer health, for example, is one that isn't, for whatever reason, it feels off. Then we will actually go and like deep dive and look at like what's behind that, and look at like some of the things that I sort of talked about, like, product usage, product breadth, and look at those items and dig a little deeper, and see kind of like what's going on.
Oh, that's smart. There's been it seems like the industry is changing a lot in terms of the relationship between finance teams and data teams. What does that relationship look like at Gainsight?
Yeah, so we have a great finance team. So first of all, let me say that. No, we do.
I believe it.
Yeah, we do, and we have a centralized data team as well. And so we are working very closely with them. And so although they sort of own the data, we're heavily involved. And then we do also usually, and within the data team, are basically individuals who just essentially, just like an FP&A team, sort of focus on, they have business partners. And so they focus on sort of specific people. The way we kind of operate right now is, although they're pulling a lot of the data, these individuals, finance ends up being a bit of a sanity check, because especially since the ops team is always very deep into the numbers, and the teams are always deep in the numbers, we sort of provide sort of the sanity check and the extra pair of eyes. And it's a really great I would say a symbiotic relationship. And so, you always know it's working when finance is actually called to the table. instead of
Yeah.
pushing their way in, and we're often sort of called to the table. So it works really well.
That's very cool. Um, when it comes to things like subscription metrics, what are is that still like sort of a collaboration between the finance and the data team? Is that more of within the land of finance only?
Yeah.
And then, what are some of the sort of hardest parts of getting that right?
Yeah. So when we're saying SaaS metrics, you're talking about GRR, NRR, just so I'm clear. Yeah.
Yeah, stuff like that,
Yeah.
and like
Yeah.
payback period, and
Yeah.
like
Yeah.
yeah,
I,
LTV,
I
stuff
would
like
say
that.
it depends. So I would say, like the ownership of GRR still sits like with CS, but they
Hmm.
calculated like with finances help. And then
Okay.
finance, and we're very much like in it with them in the model. So we're definitely like a check. So it's really both of us. But I think for things where it comes to actually calculations like NRR and CAC, it's mostly finance. It's mostly finance taking the inputs, and we're actually sort of calculating them. So it depends. To your point, I think some of the challenges, and I think we've gotten a lot better about this as we've matured as a company. But I would say when we were younger, definitions were something that we had to work on, because we did have situations where teams were calculating something one way, we were calculating things another way. And then we would get into a meeting and not always sort of be aligned. So, and oftentimes the reasons, made sense. So, one example is, like for the SDR group, we'll have leads. And then the AEs will have leads, and the SDR team was just showing their own leads, but we needed to see the full picture. So oftentimes it made complete sense, but just getting really aligned on like what we needed to see as a team. So I would say definitions is definitely one. Ownership, I think, is another. So if one person owns it, and then the accessibility of that information, I would say is another, because oftentimes, many teams need to have access to that information to make sure we're all sort of all on the same page. And then I think sort of like we talked about, just ensuring that we have the proper cadence, which took some time, and we continue to refine as we sort of get bigger.
Super cool. Um, a lot of companies think of like metrics, especially SaaS metrics and business metrics, as just a thing that they do during fundraisers or for board meetings, but not necessarily something they use operationally. But it's clear that you like really focus
Oh
on
yeah.
your leadership team, and you really run the company based on this stuff. What's sort of your pitch for like, this is how you should be operating, not just this is how you should be reporting?
Yeah. Well, I think, for one, it's very natural for all teams to be hyper focused on their departments. So CTO is going to focus on R&D and R&D costs, and it's just natural, and can get really into the details and just hyper focus on what they need to do. So I think as a leadership team, it's really great to get everybody aligned on sort of the big picture, and like what we're sort of all here to do, which is run a great company, give a great return for investors, and really for all of us, and do well by our customers as well as our employees. So we have this success for all, which is something we're really focused on. So I think getting everybody just sort of the big picture, and making sure we're sort of all aligned on that, I think is really important. I think the other thing is, these metrics, and probably the biggest point is that these metrics kind of touch every department. And so making sure that that everybody's sort of aligned on that, I think is important. So for example, for NRR, it starts with, of course, sales, and getting the right deal on the table, and agreeing on what's going to get delivered. And then it requires very successful onboarding from the professional services team. Then it also requires ongoing support with the support team. And then, of course, successful customer success management, and then continued advancement, from the R&D team. So it touches, invoicing from the finance team. It touches everybody, and so I think that's actually the other main reason.
Oh, I really like that.
Yeah.
I have another wonky question, this time about professional services.
Yes.
How do you think about professional services as either part of CAC, not part of CAC,
Yeah.
just part of COGS, and then especially when it comes to like pilots and sales engineering type of stuff.
Yeah.
Curious how you think about that.
Yeah, we still believe that it's more aligned sort of with COGS, that it is very, very directly related to, to basically, a sale. So, and this is yet another debate. I've seen it happen, a lot, and I've seen a lot of, have times I've talked about even just, cost relief and, shadow P&Ls, but I think the industry has sort of spoken, and I think for most people, most of this does, in rare circumstance, unless there might be some rare circumstances, most of this actually does sit in COGS, and so we do that as well, and we watch it. That one we watch religiously as well, for sure.
Yeah, makes total sense.
Yeah.
Um, Obviously, Gainsight's one of the pioneers in customer success. So I'm very curious to get your take on a couple of things.
Yeah.
Like, how do you think about measuring whether a customer success team is having, or like the type and quality and magnitude of impact that a customer success team is having on the business?
Yeah.
How do you think about measuring?
Yeah, so it might be a little bit repetitive, but we mostly look at GRR, for the time being. I mean, that's really the metric when we look at customer success as a whole. We're looking at GRR. However, it's shifting, and it's something we talk about a lot. And we think it's shifting towards NRR. And we were thinking about this even before the current economy, but because a customer success team has such a huge part in upsells and as and as well as cross sells, which is also going to be becoming, I think, more important, as well as I think just the entire industry shifting that way, as well as valuations shifting that way. I think more and more we're going to be thinking and moving towards that. So so definitely. And then I think underneath it is sort of like we talked about are things like customer health scores, as well as CSQLs and all those sort of other items. So, yeah.
Yeah. For companies that, for example, aren't happy with their GRR and RR, where does your mind first go to here's the levers that I would first look at?
Well, I think you need to have a great customer success team and a great piece of software for sure. I've heard Gainsight's really good. No, but
Me too.
Yeah, but seriously, it's interesting. We did a survey of investors recently, as well as CEOs, and we asked them in this current economic environment, where are you looking at sort of cutting, and customer success was actually at the bottom of it, which is interesting. And there was a Bain report that came out that actually said everyone should be double downing on customer success. So there you go, a third party has sort of said it, and people are looking there because of course it is the most efficient way to sort of grow in an environment like this. It's so important. So that being said, why? Well, customer success, is really works well when, they are strategic consultants of the business. So they're really in it with our customers, understanding where the business is going and providing sort of guidance in that way. And I would say, an environment like that, it's probably the most important thing. And then I think also just providing alignment between groups. So as we discussed, making sure onboarding goes well, making sure, R&D pipeline sort of matches with what customers are sort of saying as well. And then ensuring also that the right incentives for the sales team, as well as customer success, and making sure that alignment, really is very closely sort of tied. Because ultimately that's where, sales teams and CS teams will focus their sort of attention on. So I think those are sort of the key levers.
I really like that.
Yeah.
You mentioned the sort of current economic conditions, and we're recording this in July 2022, and it's a tough time for a lot of subscription or SaaS companies.
Yeah.
You mentioned that it's moved a little bit, or it's like refocused you a little bit more on certain metrics as opposed to others. And I'm curious, as far as like actual decisions that you're making right now,
Mm,
has it impacted anything, or like
yeah.
what kind of things are you thinking about a little differently
Yeah.
than you were? I don't know, 6 months ago.
Well, I think, first of all, every finance team, if you're not doing it now, I think most are, but if you are, is really looking at, the second half of the year, really taking a look at, hiring, so we're hearing that a lot from people across the board, and reviewing, who's really, what we really need to hire for, what's crucial. And then I think everybody's looking at sort of their top three expenses and taking a look at that and seeing where things could be moved. Even things, like T&E, and how can we be
Mhm.
more conscious of T&E and be really, responsible with it, and that's usually like how we like to go, instead of saying, okay, well, there's going to be, a strong freeze, or here's a cut. So,
Mhm.
a lot of it is just, getting really responsible and sort of conscious. And I think, we're back to scenario planning. I mean, I think we saw this during the COVID days as well. So really looking at, different, scenarios, and just being prepared and just getting sort of ahead of it. So I think that, those are things that we're sort of doing, in terms of, metrics. I think, like we've been sort of discussing, renewed focus on NRR, renewed focus on free cash flow, renewed focus on CAC payback. So it's the return of, not only do we want to see you grow, but we want to see an efficient business. That's what it's really about at the end of the day. And those are usually the metrics that really kind of can demonstrate that. And that's what investors are asking for.
Yeah. Um, I'm really curious about the scenario planning. A lot of our audience is like companies that are a little bit earlier, obviously,
Mm-hmm.
than Gainsight, in that they're like Series B, C, D
Mm-hmm.
companies. So still, with impressive finance leaders, but not nearly as sophisticated as y'all. So I'm really curious how you think about scenario planning, which I think pretty much everyone's on mind at this point, because what you planned for H2 of this year at the beginning of the year and what
Yeah.
you're thinking it might look like has to be different. So I'm curious, like, what does that functionally look like for y'all?
Yeah. Well, it all starts with bookings, at the end of the day. So it's having a really candid, conversation, I think, with sales, and doing a lot of like capacity planning, and basically looking at, okay, we have planned great, and and that will definitely be one scenario. And, where do we think, if the economy should go a little bit lower, where do we think sales will be? And usually I like to see three scenarios. So, we see I want to see sort of the worst case. I want to see if we're gonna still assume we hit plan. And I actually think there are always companies that do well, even in certain these economic environments. So if you have just determined that you are one of those companies, I think you should always do a scenario that actually where you're hitting above plan as well. But that, I think, just requires a little bit of just looking at yourself and saying, are you one of those companies that can actually sort of benefit, from this? So you might actually even have, the third scenario actually might be where you're actually doing better. And from there, looking essentially, at your cost base, and sort of and having a target, and like, where you need to be. What's the target? Well, it will often be, the current plan that you have, but depending upon like where you are. So, and what I mean by that is particularly, your cash needs and your fundraising needs. So you may all of a sudden be in a situation where you're expecting to raise, next year, and now you want to wait for a variety of reasons. Valuation might be one, tough funding or requirement. So now you may need to actually have more runway, and so then you'll have to burn like less this year. And if you decide that you're actually one of those companies that's going to benefit, then maybe that's sort of not the case. So it's interesting because first of all, I think you just have to sort of know yourself and get really honest about what bucket you're in as a company. And then from there, you can kind of go into, which scenarios sort of make sense from you, and then have those honest conversations, first with sales, and then sort of the expenses follows after that.
That makes so much sense. So how often are you like revisiting these? Is it monthly or quarterly or some other
Yeah.
cadence?
Things are moving so fast, as I think you're aware, as well as your audience is aware that in a normal year we do a very extensive budgeting process. It's very extensive and it takes months. And then I would
Yeah.
say we probably review it mid-year, and that's usually works. And now, to be clear, we're doing a forecast every single year. But what I'm saying is like the entire management team getting together and really reviewing strategy as well as the numbers. That thorough review probably is the plan, and then probably a good reforecast. Things are changing really really fast. So we're doing it right now. We're doing scenario planning as we speak. And I would anticipate that we're going to look at it again in a quarter. So we'll have it ready by the beginning of Q3, and then I think we're going to look at it again in another quarter and see sort of like where we are.
It's so true. Trying to imagine what the world will look like in a quarter just feels like who
We just
knows?
don't know right now. Yeah,
Yeah.
we just really really
Yeah.
don't
Very
know.
high uncertainty.
Yeah. And, it depends upon capital structure and all these things. So, I mean, if you have, for example, there are some public companies that have a lot of debt right now. So every time interest rates rise for them, they're probably doing scenario planning every time interest rates rise, because it means that they might have to shell out millions of dollars more in interest rate. So,
Oh yeah.
it depends. But for a company like ours, and probably for many of the other viewers, it's probably a little bit different.
Totally. Um, in 2020, Gainsight was acquired by Vista Equity, and one thing I'm really curious about is what changed before and after,
Mhm.
especially when it comes to
Mhm.
finance.
Yeah. Well, I can talk a little bit about the decision. We had some options. We could have stayed, and we could have just raised,
Oh, I would love to
you
hear
know,
about that.
we could have, of course, gone, public, and so we had lots of options. But first of all, we're in it sort of for the long haul. Our focus has always been to just build a durable, strong company. And so one of the reasons we decided to go with Vista as well. First of all, if for your audience, I mean they're 80 billion plus in management for dollars, and they have, I think, about 80 companies under management. So if you put them all together, I think they're like the fourth largest software firm. But they're also very sort of very well known in the industry, really well known for being ones that can really get a lot of efficiency out of sort of like a business. And so, that's why we decided to sort of partner with them, is to, in this sort of phase, even before this economic environment, we were already sort of talking about efficiency. So in a lot of ways, our charter hasn't really changed. And we thought they would be a great partner in sort of helping us sort of get there. So that's kind of like, how we kind of came to that decision. And I'll tell you, like right now, we're actually very happy with that. We're so thrilled to have them like as partners. They continue to sort of believe in us and believe in our charter, and especially in an economic environment like this, it's really helpful to have investors that are just true partners for the business and really helping you think through a lot of these decisions. So it's another pair of executives that are constantly thinking about it. So in terms of like what changed before and after, I have just literally operationally, I think, definitely we're looking, we have another group of people to actually look at the numbers and really think through it. So I would say it's really helpful to have that. But really in terms of the actual like business, honestly, like we're just kind of like business as usual. They're really focused on us growing. They're really focused on us becoming, really durable and efficient growth company. And, except for having, a lot of more people like, in the business, I would say that the average employee at Gainsight doesn't really even see much of a difference. It's probably, like the leadership team is meeting with, Vista, on a fairly regular basis to talk through different things. But it's also really great, by the way, as we go through some of these decisions, to bounce things off of them. They, of course, have 80 companies that are also thinking about these things at the same time. And so there's a great network as well. So I think just having that network and just to be able to ping actually another CFO and talk through things has been also sort of helpful. So if anything, I think it's just like more help and more support.
Yeah, I was actually going to ask more about that, which is that the one of the uh, benefits of like joining a best-in-class portfolio like the Vista Equity portfolio must be sort of the cross-pollination of all the ideas of all the stuff they've done before, all the stuff that they've seen, and then also reacting in real time to things like insane market
Yeah.
conditions. So I'm curious, like what that has been like for you.
Yeah, so they have their own capital markets group, and they're really talking to the street on a regular basis, and so we're able to sort of get downloads, and if certain things come up with our companies, there's just always sort of resources there. The way Vista is structured is we've got sort of the deal team and the finance team, and then they've got Vista Consulting Group where there are experts in each of the operational disciplines. And so, I work with both of them very closely, but to just have people who have not only been through it, before actually in their professional lives, and then have come over and are working with Vista, but have seen it across a portfolio and can tell you the pitfalls before you actually, go into them and help you just really think about things like in a different way is just, it's really helpful, especially like at this stage. So yeah, it's great.
That's very cool. Um, Last question I have
Yeah.
for you is since you're such a data focused and like metrics focused executive team, I'm generally curious like how you think about or what are ways that you wish finance or executive teams could go deeper or should go deeper into their metrics on a regular basis? Any thoughts on that?
Yeah. So I think definitely looking at metrics in terms of like, product line. And, so there's a business line, and then within the business line actually could be product. So I think you actually look at it both ways. Really looking at, for example, like, things like product functionality and usage and where people are actually like within your product. We have a great product called PX as well that can also help you sort of do that. But I think really getting deep in that way is really helpful. And particularly like the margin analysis, because that's another thing that now investors are really looking at. Like, what are your margins on each of these products? I think segmentation is also, super important. So, you might be looking at, customers, a certain number of employees and above, and categorizing them, but really figuring out what's the right segmentation, for your customer base, and looking at metrics in that way is also, something that we do on a regular basis. Cohort analysis for sure. That's how we actually calculate our NRR as well. So following cohorts. And then I think the last thing is just thinking through, leading versus lagging metrics, because, of course, the ones that are, lagging, there's not much you can do about it, but you still want to know. But we all kind of want to get in front of our business. So thinking through those as well.
Yep, like customer health, I imagine,
Exactly.
right?
Yep, that's right.
Yep.
That's right.
Sorry, another wonky question. When it comes to margin analysis, either on a product line level or a business line level or a segment level, something that we see a lot of companies try to figure out or struggle with a little bit is actually getting the granularity in the cost data. So like what goes with what. And I don't know if you have any advice for CFOs who are thinking about trying to do that level of analysis.
Yeah, I think, as always, as finance people want to be 100%, with everything, but sometimes, you have to kind of find the middle ground. So, what I mean by that is, for a lot of our products, for example, we can pretty much identify the R&D people. We can pretty much identify, the sales and marketing people. But for other items, we often have to come up with an allocation methodology. So in those instances, we actually will actually come up with an allocation methodology, and we will actually bring it sort of to the executive team and actually talk through it, make sure everybody's aligned, especially when you're doing something like a margin analysis, and then sort of roll it out. So I think, it's better to have data that is, maybe 70, even 80% there versus not looking at it at all. And I think it's a great way to just sort of like align the business, in looking at sort of this data. So that would be my advice there.
Oh, I really like
Yeah.
that. How often would you adjust these allocations?
Probably max once a year. It's something I think that you're looking at kind of like during planning, for the most part.
Yeah.
Again, unless there's something like in the business that, is sort of like rapidly changing. But I wouldn't say in terms of allocation methodology, you have to really look at it like more than that.
Yeah. I can definitely imagine that a lot of our finance audience will relate to the idea of like perfection
Yes.
is what you want,
Yeah.
but you have to be okay with getting the insights, even if you're not getting the perfection in the data.
I think so. I think it's the type of thing where even if it's not perfect, you have to just kind of keep moving and still take a look at it. Because I mean, I've just never, even when I knew it wasn't perfect, I always usually get some insights. And sometimes you will look at it and say, okay, well, this doesn't quite make sense. And then you go back and you kind of adjust the allocation methodology, and then it just makes more sense. But I think, just starting is sometimes half the battle. So.
Yeah, totally. Thanks so much for recording this with us. And I think people are going to learn quite a lot from you. So really, really
It was
appreciative.
a pleasure.
I hope you enjoyed today's episode. Before you go, let me give you a super quick overview of what Subscript is, because chances are we can help you. I started Subscript because in my last business, I had this problem. We had this giant Google spreadsheet, and that's where we kept track of everything about our business. And if you're anything like me, you're a data-driven leader who really cares to understand numbers in order to make sure that you're making the right decisions. But when you're looking at a giant spreadsheet with lots of just tabs on tabs on tabs and lots of people with access, you're probably not looking at the right thing, because you can never be confident that someone didn't mess something up, or that someone didn't fat finger a number, or that you considered all the corner cases that you actually needed to consider. So that's what Subscript does. We help you understand your subscription business at a much deeper level than you ever thought possible. If you'd be interested in giving it a try, come check us out at subscript.com.